Alright, so welcome back, folks. I have failed to get some sleep today, so I thought I would linger around for Asian session trading. For Asian session trading, what am I looking at? First and foremost, my execution start after 7 p.m. Then I'm looking for minor buy side and minor sell side prior to the market open, which is 6 p.m. So the market is opening up at 6 p.m. and my trading starts at 7 p.m. So I have a full hour to do top down analysis after the market opens. So I'm looking for minor buy side and minor sell side prior to that. Then after that, I'm looking for initial buy side and initial sell side, which is a move that takes out one of the two minor buy side or minor sell side and comes back into the new opening gap. So with that known, without further ado, I've been around, so I've done something. I'm having the market opening up right here at 6 p.m, taking out this low. This is minor buy side, this candle's low. So this move comes back into the new opening up. So this is my initial sell side, this candle's low. And then the market rallies higher, taking out this minor buy side. And how far can that market manipulate to from that to that? You're going to have the negative 0.5, and the market drops prior to 7 a.m. gives us a structure shift 2022 model, then a fair value gap. So I'm looking at this fair value gap, extend that into price for 7 a.m. trading. So I'm having the low of this candle coming in at 2498.0.75, and the high of this candle coming in at 24978 even. So within that price range is my fair value gap, extend it into price. You're going to watch that the market drops, comes back into this, fails to reach the new opening up. So I'm not marking this high as initial buy side until I get a move into the new opening gap. So I have the market dropping prior to 7 a.m, showing you its intent. Remember, if I took out sell side, then we went for buy side. So I'm expecting the market to drop. And if we are to drop, what are my targets? I'm having this initial sell side. These lows right here are so clean, and I might expect the market to come back into these inefficiencies, probably this breaker, or take out that low. So those are my goals for sell side. And I have the market opening up at 7 a.m. Open up. I think I should put some lipstick on the chart, just like that. I have a clock chart. So 7 a.m. opens up. We are trading back into our bearish fair value gap right there. That right there. Just like that. So you are trading into that. 7 a.m. opens. Before 7 a.m, the market rallies into the upper half of this bearish fair value gap, and we all know that we do not want the market to come, if we are really bearish, we do not want the market to come into this upper half. But the market does it here. And what does this give you? This gives you a stoppage, or what you want to see the market stop at if we are to manipulate back into this. I do not expect this side to be taken out. So that's what 7 p.m. does. We open up, we fail to reach cost rate encroachment. So I expect this to be my intermediate term high, because I'm having a short term high this side, and I expect a high this side, which is here, a short term high. We form that, measuring from that high to this low. You're going to have your optimal trade entry. This 0.79, 0.705, and 0.618 as your optimal trade entry. So I take my short. I would want to execute more at volume imbalances. So much as I have this, I'm having this candle dropping. You see that right there? This is a bullish, I'm having this candle. This is a bullish candle. and this is a bearish candle. So this candle just jumps to this price, to 2497 2.75 right there, and this candle's body was at 24975.50. so there is a gap in price right there. I'm executing at that, not at these levels. So the market goes back into that. I have no entry. Then I want a drop below this volume balance. We drop below that, and the market comes back into that with this candle at 7:03 p.m. We'll rally back into that volume balance. That's my execution for shorts into those levels. So I'm pyramiding right there. The market falls. The market does what? We fall, coming into this volume balance, and we just close with volume, leaving us a breaker. The market does not come in back into that because we have an inversion fair value gap right there. I'm not marking to this candle because this candle filled a portion of this fair value gap. So what am I left with? This, from that candle's to this candle's high. So that's why I do not mark it. By default, it has to be right there. But I do not mark it at that because we have the market filling portion of that before rallying higher. Okay, so the market drops. We have a fair value gap prior to 7 p.m. That's what I told you, that I need price action prior to 7 p.m. So I reclaimed fair value gap right there. The market rallies back into our inversion, then we fail to come back below that. Then we have a candle dropping, closing below the reclaimed fair value gap. So the market references to the top of that one more time, not that consequent encroachment of this. You see, the market, now these are corrections that the market makes if it happens to do something that doesn't follow the algorithm. So the market, we have the market rallying higher. The wicks have had to do the damage, and the bodies had to stay below half of the emergent fair value gap, but we have a body stubbornly going above that with its open, so giving us a gap. And what does the market do to correct that? Gaps down. So have volume imbalance and larger volume imbalance to keep up for this mistake that happened right here. And after that, we drop, closing below reclaimed fair value gap, and then we rally back into its top, and then we spool lower. We have a volume imbalance right there. I want you to look into that. The market drops into that. We use that upper portion of that, and note that volume imbalances have room for error. I cannot argue about this because I expect the volume balance to fail at some point. But above the volume balance, what do I have? I'm having a bearish fair value gap. I'm having a fair value gap on the left hand side, which was inversed right there. So this volume imbalance, I'm looking at the smallest significant PDR in that large fair value gap, so which is the volume imbalance. I'm not considering the whole of this because I'm having this reference point, the volume imbalance, if you can keep up with that. So after that, we drop lower, forming a fair value gap right there, bearish fair value gap. Market comes back after taking out this as my target one. So this is my first target, that low that formed prior to 7. So that is my first target. My second target being initial sell side or the negative 0.25 below this low. So how far can the market go below this low, negative 0.25, and we'll have initial sell side at that. So I think I can take this off. I want my chart to be a little bit smarter. So we hit those targets smoothly, coming back into the needle opening gap. I trade into the high, we remain in the upper part of that. This candle nullifies that, tapping initial sell side, and pushes back higher, finding the volume imbalance, which gives us a drop lower. The market works with that, going back higher into the volume imbalances. The body respects, the wicks do the damage. Now if I'm to do something of this sort now, note that this candle has no top wick. The market corrects that right there, gives it a top wick. This is the manipulation of this candle right there. And where does it take it to? The unfilled portion of that. Okay, so we drop lower, touch that one more time, then we finally get a closure below the corresponding equipment of the new day opening gap. Then the market rallies lower back to premium of the new day opening gap, the upper half of that, and then we drop lower into the new day opening gap of October 13th, 2025. So which has the low that I told you. This final take profit is half of the -1 standard deviation and the -1.5 standard deviation of that whole move. If I am to measure, -1, -1.5, half of that. This is my final take profit. If I wanted, I can hold it into the 12 a.m. to 12:30 opening range right there. If I'm to interpret it into that, so I would want to consider this because this is the most efficient level for the market to reach at as a take profit before a big retracement or a reversal. Half of the range between the -1 standard deviation and the -1.5 standard deviation. And what do we have at that? So if I'm to extend this into price, we have an inefficiency and an inversion fair value gap. So I wouldn't want to have myself working with this. This is a lot of discomfort because you're expecting the market to give you a few candle back up into that range. So as you can see, this would have been our entry, the short, stop loss above that fair value gap by a tick or 2 ticks probably. Then our first take profit, second take profit, third take profit, final take profit right there. We are trading into that.
Thank you.
If it happens, sorry, fuck you. If it happens to drop and spool into this, so I'm watching the market to give me a drop into that because we have tapped corresponding encroachment of the new day opening gap on the 13th of October. So I'm expecting the market to rally into this with speed. I do not want to see the market spending a lot of time before taking that out and taking out this low. So I'm having that fair value gap which has been inversed. So I'm having an inversion fair value gap right there. I want the market to stay within that, the bodies to stay below, and we drop lower, taking out this week. And I think we took out this right there. So where did that move start from? I'm having that high, measuring from this high. You see how they, okay, I'm going to come back to that later. Having negative 0.25 right there to be hit. Okay, the bodies are respecting the lower half of this, so I expect the market to be pushed lower. When I have this, I know I'm getting into a deeper retracement, higher, probably coming back into this if I get a closure above that, and I do not want that. So making out this week, I want the market to take that out. So I would want to see how the market works with half of that week. That is what you have. So how the bodies respect that. I expect with speed reaching consequent encroachment of that weeks and gaps. Expect that half of that week, and then the market dropping into my take profit. If I get a closure above this, I'm expecting a bigger retracement back into this, then maybe coming back to take profit. And I'm expecting that because we have taken out this low. Now, if we didn't take out that low, I wouldn't be expecting that. Okay, so let's watch and see what the market prints for us. At consequent encroachment one more time. Tap into that one more time. And the market to respect. I know what's wrong with this series. So have a body closure. Now I'm not surprised if the market disrespects that.
Thank you. Thank you. Thank you. Thank you.
Okay. Okay, that's the massive drop I talked about. Attacking my final take profit right there. Want the market to drop with speed into that. Just like that. So right there you have your final take profit, and if I wanted to, I would taper it into 1230 opening range of yesterday. I'll taper it into that, but I'm not interested. I would be contented with that. So thank you for watching. That's Asian Session Trading. I love you guys. Thank you for showing me love. So you can tell me on how I can make this better. We dropped into this. But anyway, nice day guys.